dump that is coming. And I talked about implementing stop loss. Now in crypto, I know a lot of people don't understand how stop loss work. So in this video, in this live, we're going to be talking about stop loss, how to use it, how to implement it correctly, and the consequences of not having it, of not using it, or even not considering it at all. Now, I remember Bitcoin Gorilla, and if you've not subscribed, just do know that I do make updates all the time on crypto and sharing my experience, my trading strategy with everyone online. Now, here's the thing about crypto is you must understand that volatility is real. What is volatility? The chances of price instantly taking a turn within a blink of an eye. That is volatility, when something instantly change direction. The chances of Bitcoin could be in 68K and the next 1 hour or 2 hours, Bitcoin will go to 20K is there. So this is why you must take a protective measures to save yourself and rebuy, right? So what is stop loss? I'm going to start by first of all explaining to you what stop loss is. Now, stop loss in trading is a way of minimizing the loss. Now, stop loss does not guarantee you that you're not going to get any loss at all. But what stop loss does is to prevent you entirely losing all your money in the market or getting stuck in a trade. Now, remember, in trading, you make money when your money moves, right? So if you enter a trade right here, if you entered a trade right here and the trade got to this point and you didn't likely exit, maybe you didn't know, or maybe for some reason, there could be any reason, this is trading, anything could be a reason why you got stuck in the market. And don't blame yourself all the time for making the wrong decision. Always try to, as fast as you can, look for a solution or a way out of your problem. Now if you entered a trade here, right now, if you're trading a higher time frame, you will want to put your stop loss right here, right? And you can see that if you put your stop loss right here, because it's the last low, always try to put your stop loss, whatever time frame you are trading, on the last low. What you are trying to do is, if everything goes bad and it drops lower than this, you can enter the market. But if you're using my strategy, I believe there's a better point to put that stop loss, which was around this point, right? So there's a better point to put that stop loss than here. But for a long time investment, for over 6 months, you want to enter the trade and ride it, then here would have been the perfect point of putting it based on this chart. Weekly chart here is the perfect point. Daily chart could have probably here, like I said. But if you enter the trade here, I think the best prevention would have been right here, right? Yeah. Now this makes stop loss quite complicated. Where should you put it? I know what I just did now got you confused. Should you put it here? Should you put it here? Should you put it here? This is a lot of reason why so many people don't use stop loss, and at the end of the day always get caught up in a dump. So in this video, we're going to talk about stop loss, how to implement it, the right place to implement it, and the right time to implement it, and how to actually follow up with stop loss, especially if you are permitting an entry. Now, like I said, before I go on, before I continue, if you've not subscribed, do subscribe so that you're going to get updates as soon as I drop my live. You can join the house, and at the same time, as soon as I drop updates, I do analysis all the time. Now, as a technical analyst, and trader, I've gotten to a point where I learned that stop loss is very important. No matter my analysis, no matter my prediction, having stop loss is always very important. It helps me save the loss. So what, let's take for example, I bought Bitcoin at this price, at let's say this price, because a lot of loss make that mistake of buying the top. Let's say I bought Bitcoin at 60K, right? I bought Bitcoin at 60K. Now, what will stop loss do for me if I put stop loss? Now, what stop loss does is, if I put stop loss in this trade, my stop loss maybe could be around 58K, right? Now, what stop loss does is asking the market to automatically close my entry or sell my Bitcoin for me if Bitcoin should drop below 58K. So in this situation, if I have placed my stop loss right here and I'm bought at this point and I place my stop loss right here, it means that once this candle that broke this stop loss, the market will just automatically sell my position. Now, the thing about this selling of position like this can only happen in exchanges, right? It can only happen if you have your coin in exchange. It cannot work when you have your coin in wallet like blockchain or any other wallet that doesn't instantly we need you to swap the coin. It's not going to work for you if you are doing that aspect. This is only going to work if you are a trader. That means if you have your altcoins and Bitcoin on an exchange already waiting for any me, I preferable like keeping the coin that I know that the time that I'm going to sell it is not, I'm seeing a threat in the market. Whenever I see a strong threat in the market, I always move my coin to exchange to get ready and put stop loss, especially when I'm entering the coin. Unless I'm going for a long term investment, maybe a year or so, then I wouldn't mind. I'll just leave it in blockchain. But if I'm trading, probably monthly, daily, weekly trade or anything, I always like leaving my coin in exchange and implementing a stop loss. Now, when it stop loss can really be very tricky because it works easily on futures. If you are trading futures, then implementing stop loss comes with already set patterns like put your stop limit order or stop market order. If so position gets to so position, close the position. It's easier on futures because Binance and other exchanges make it easy for you to just automatically set the stop loss and just allow your trade to run with it. But the question becomes very complicated when you are now trading spot, right? How do you set stop loss on a spot position? How do you set stop loss on a spot position? It becomes more complicated because there is no any programmed stop loss for anybody on spot. You must understand that this market is programmed to take your money. This market is programmed to take your money. So those on spot only benefit when the market is going up. Once there is a turnaround, there is no any programmed stop loss or anything to save you in such market. This makes it even more important to consider stop loss on spot as much as you're going to consider stop loss on futures. Yes, the exchanges made it available on futures because on futures there's something called leveraging, and leveraging can instantly multiply your loss unlike it's going to do on spot. And again, one of the reasons they don't bother to really provide these things for the spot traders is because on spot your losses are imperishable, so likely you must be forced before you take a loss on spot, which means when you are in a spot position, all you need to do when you see a dump is like the stubborn ones will tell you they want to hold. But sometimes, from my own personal experience, holding in a dumping situation doesn't always work out that good. That is from my experience in 2017. But one thing I've learned again about crypto is market is constantly changing. The pump you've never seen before will likely happen again. It will likely happen. You've never experienced it. This is a new market. We are all trying to learn how crypto works. But most of us are bringing things that we've been using in forest to crypto to see how we can use it to understand the market much better. Example of those is me. Now, one thing I want to tell you about this market in terms of stop loss is you must make it a second nature. Stop loss is like your best friend. You have to learn to use it. Remember, I am going to tell you how to use it, how to implement it, and how to set it. You have to set it actually manually on any exchange. There is no stop loss for sports traders. You have to do it manually. This makes it very important that if you don't know, go, you don't know. So you are likely going to keep losing money until you understand how stop loss work. Stop loss helps you to minimize the loss, help you to convert your money from the crypto that is dumping into a USDT, and the USDT will help you buy it back cheaper. So like I said, for example, like the last example I used, I bought Bitcoin at 60k. If I bought Bitcoin instantly at 60k and Bitcoin just went a little up, I'm hoping to get more profit, so I didn't take profit. I didn't take profit because I'm hoping, maybe I got greedy. I'm hoping for more profit, or I'm hoping price to continue. So I am in the trade. But if I enter the trade, it is required of me to set a stop loss, right? So I go and manually set my stop loss at 58K. Now, because why am I setting my 58K and my stop loss on 58K is you have to set your stop loss on last low. Always consider the last low. If anything breaks the last low, it's going to go further. That is the rule of price action, right? If support gets broken, it's going to go further to break, to go and seek for the next available support. So if this support, because right here this is a support, in this scenario, from this point, you bought it at the top of the support here, that's 60K, right? And then why the 60K entered? You entered because it made a new low, right? So this new low instantly brought price to go all the way up. Now, if price for no reason did not continue that move, of which could happen, and nobody can stop it, not even me, not even Binance, not even the if not even Elio Max can stop price from going down when price wants to go down. Now, price goes down for a lot of reasons. Why is Bitcoin dumping and why is altcoin all dumping with it? It happens for a lot of reasons, right? So one of these reasons is the fact that sometimes price gets to a point where buyers are no longer interested in buying the coin, because some see the coin as is too overpriced. But you know that price can never to be too overpriced, but some buyers will start seeing the price as too overpriced and start believing that there are better support areas below that they can buy it cheaper at. In such situation, you find people who didn't even buy the coin shorting the coin, that is selling what they don't even have. And most times it happens on futures, right? You find them shorting the coin. Another good example why a coin will start dumping is those who entered the coin earlier are likely to start selling and taking profit when they see a threat or an area in price action like resistance. When they get price get to this resistance, they want to take profit because they know that chances are high that price is going to go down. I remember what happens when someone takes profit from a position. It means the person is selling. And what happens? What does selling means? It causes supply, and as more supply enters the market is likely going to keep going down on looking for demand to change the direction, right? So if more supplies enter this market, it keeps going down. You can see a support got broken here and it keeps going down. It breaks another support right here. That is the trend line that they have been respecting, and it got to the support. Now, like I said, if you're trading daily chart or you're a daily trader, obviously you would have exited the trade at that 58K. That is the importance of the stop loss. The stop loss will automatically sell your coin for you from Bitcoin into what? USDT. And when you are on USDT, it will require a lot of patience. Now, one of the problem a lot of people have with stop loss is when stop loss kick them out, they start backbiting about how they have taken a loss, but not considering what if the loss would have extended. Now, for our case, this guy who exited at 58K might have taken $2,000. If he has a full one Bitcoin, he might have taken $2,000 loss. But here's the good thing about the stop loss: the chances of him making back that $2,000 would be high. All he needs to do is to be patient for the coin to seek another stronger support. And in this situation, the stronger support is right here that the coin has arrived, right? And there's another support right here. So the only thing is that each time he buys this market, he needs to implement this stop loss so that if the support he box eventually breaks, he still exits the market. So what the stop loss does is, if you are supposed to lose $5,000, the stop loss will cut the loss to probably $200 or $500. Compare $200 to $500 to 5,000 loss, you find out that you save yourself not just the headache, but the mental stress of getting stuck and waiting for God knows how long. I remember it took almost 6 months for Bitcoin to recover this last downward move, of which in these 6 months there was a lot of mental stress. Imagine if you have exited the trade here to buy it back right here. It's the same thing that stop loss does. If you had exited in 58K, then you should be buying at 41K or 40K range or even 45K range, right? It could be a better, because why? If you are buying at the price made it to 41K range, and aside from this last low, the next low is here, which tells you that's where the next support is, right? That is where the next likely support. This support is shallow because it's a previous resistance. It's a very shallow support because it has never acted support in the previous past. It's a shallow support here. It's a shallow support right here. It's a shallow support because it was a previous resistance, right? It's going to act more like a resistance this time around when we get to it. So I do see a rejection coming around this point again, but I am here to discuss stop loss. So if stop loss kicked you out here, it takes a lot of patience. Now I do get it. Stop loss is one of the hardest things to get used to. You're going to get kicked out several times with stop loss, but you must understand what stop loss is. That stop loss is not there to save you entirely from not catching any loss. It just saves you from catching the bigger loss. It just saves you the headache of getting stuck in a trade. So it is good to understand that stop loss is very important in trading, especially in crypto, because of crypto is still the most volatile market. More reason why you need a stop loss. You might say, hey, stop loss is like someone, or whenever I use stop loss, it's like someone follows me from my village. As I put the stop loss, that is how the coin will come back and kick me out and then continue the move. Yes, I understand how painful that is, but nothing is 100% perfect when it comes to trading. You have to understand the use. It is the advantage over the disadvantage that matter, that makes stop loss important. If you have not experienced a big dump in trading, you might not understand the importance of stop loss. If you have not lost big money in trading, you might not understand the importance of stop loss. If you have not been stuck in a trade for 6 months and the coin keep going down, I'm talking from my experience in 2017. How I understood the importance of stop loss in crypto is from my experience in 2017, where I thought that not using stop loss and not catching the little dumps is going to save me from Bitcoin moving from 20K all the way from to 4K. It took until the dump completed and I see the loss. I'm forced to take the loss when I'm not supposed to take the loss. And it is when I'm being forced to take the bigger loss that the coin eventually change direction and start moving up. So from my experience, I have learned that instantly when I'm buying the coin is the perfect time to put the stop loss. When you are buying the coin, use your stop loss. So don't enter a trade that you don't know where the stop loss is. So if you are buying a coin right here on support, and this is one of the reasons why patience is always very important. What do you mean? When you are using stop loss, always make sure you are buying support. Always make sure you are buying support. It's what it does is minimize the stop loss. So imagine if I bought here and if I bought here. Let's clear this chart so that you make it easier to understand. Imagine if I bought Bitcoin right here and me buying Bitcoin right here. Now, if I bought Bitcoin right here, Bitcoin will go up, and chances are high that yeah, I'll profit, or I will make, or I'll lose money. But I did profit, right? But this is where my stop loss is, which is far very extended. And if I was stupid not to take profit here because I'm expecting Bitcoin to make all its weight what to the top of this point, right, to the top of this point, because that's, if I'm following the channel, that's what the bulls are supposed to do, to the top of this point. If I was stupid enough not to take any profit, I always say it's good to take some profit. It's good to take some profit, even if it's small amount of percentage, so that you buy in any opportunity you have, right? So if I enter here and I did not exit some little amount of money that I made here, and the price returned, you can see it has completely taken me out, and now I am in a loss. Now it is difficult to set stop loss in the beginning, because only the distance of my entry to the distance of where I'm going to put stop loss will give me headache. Imagine the stop, if I bought a full BTC and I bought it at probably 50K, and my stop loss is supposed to be 39K, that is 11K loss. That will give me headache already, and I will become scared to implement it, and I'll end up not even using the stop loss, because the thought of losing 11K will destabilize me from even using stop loss at all. I'm just telling you why a lot of people are scared of stop loss. Now, if I end up using that 11K and I was wrong about it going up and it eventually went down and kicked me out, I will feel bad because I'll never forgive myself for taking 11K loss. So, but what if I had been patient, or I am bold enough to buy a support? Now, support always break. I always say that. So buying support also have its advantage and its disadvantage. You must understand that in trading, there's nothing perfect. Even in the life you are living as a person, life can never be perfect. You plan and the plan changes. You wake up in the morning and the thing you planned last night, everything is changed, and you are forced to change your own plan. Life itself is never perfect. So trading can never be perfect, because you must understand that it is people who are trading this, and these people are forced to make decisions every day. And just like you know that decisions can be changed at every point in time, this is why you must always consider yourself and always think on, how do I minimize my losses? How do I cut these losses short? How do I exit anything that happened? Because even though I predict it, I can be wrong. Remember, you don't know who is going to wake up tomorrow morning. Elon Musk can wake up and say he wants to sell all his Bitcoin. You can't stop him. And when he do, and the next man do, and few people do this, the price dumps, and then you see everybody is now being forced to sell. So in such situation, you don't want to be left in that chances, right? That is where you get to focus on buying support, so that if you enter price here, let's say the price dump to this point, this red candle dumped to this point, right? You can see the next candle quite did not go and touch that candle at that low. Let's say you entered at this point, right? When you enter at this point, you put your stop loss right here. If anything goes lower, you are out. Probably the stop loss you enter around 40K, stop loss is around 39K, 1K loss, you are out. 2K loss, you are out, right? Instead of waiting for further losses, stop loss just will take you, will cost you a little loss. So how do you now prepare your mind, your mental mind, to accept these minimum losses? You must understand that to make money, you must be open to accepting loss. In the crypto market, it is sweet when the market is going up, 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 up. But if you really understand trading, then you must also know that it takes two to tango. It takes the buyers and the sellers for price to move. So at some point, all those people who are buying, we want to take profit from their positions, and all those people who are selling, we want to take profit from their position. This is why price don't move all the time to one direction. I hear a lot of people say Bitcoin is going to 200K, Bitcoin is going to 100K. Yes, Bitcoin might go to that at some certain point in future, but before Bitcoin gets to that point, those who actually bought at 20K, 10K will want to take profit at some point. And this is what forced price to retest previous support and resistance. And to understand this better, then you must understand that at some point anything can happen and volatility can change, and we could even see Bitcoin coming to 20K. And if you bought Bitcoin above 40K, it will be a disaster for you. So learning to marry stop loss and understand her is good. Yes, stop loss hunt is part of trading. If you are a price action trader, then you will understand how stop loss hunt work, and you will understand why support and resistance always break. I make predictions every day, but I have learned as a trader and as a technical analyst that support and resistance is as vulnerable as anything out there. This is why you need, if you are trading support and resistance, then you must learn how to use stop loss. Because why? As a price action trader, you understand that support and resistance break depending on the demand and supply on that support or resistance. With this at the back of your mind, stop loss becomes your best friend. No matter how many times stop loss gets you kicked out, you know you cannot enter a trade without setting a stop loss. Knowing that you cannot enter a trade without setting a stop loss, because that trade, I don't care if the most perfect technical analyst in this world is making a prediction for you. or if the biggest computer is making a prediction for you, it will still be a safeguard to have stop loss. No matter how rich you are, you should know that if somebody shoots you, the bullet will still penetrate. No matter the bodyguard you have, no matter how rich you are, you want to still protect yourself, because of the next man who will want to come and take your money might want your life along with it. It's the same thing. So you will want to hire protections like have a car with bulletproof, even though you know that at some point they can't actually stop much, but you know they can still save you and buy you time or maybe escape point, right? That is how stop loss work. Stop loss is like your bulletproof, it's like your bodyguard. It does not guarantee that you are not going to get a little scratch. It does not guarantee that you're not going to get a little hurt. It does not guarantee that it's going to save you entirely, but it is just giving you that opportunity to escape a bigger harm on your entire portfolio. I don't know if you understand that volatility can change, and I will not be surprised if Bitcoin gets to 12K. I won't be surprised if the whole of 2022 becomes a negative year for the entire crypto community. A lot of people will escape it, taking a little loss. A lot of people might not, because they are stuck. And while they are stuck waiting, my experience from 2027 made me understand that it took Bitcoin 3 good years to recover from the dump from 2017. It took 2020 for Bitcoin to even start changing direction, because it is in 2020 we saw 4K. So imagine the dump that started from 2017 kept going down to 2020. 3 years is a long time and can cause a lot of mental stress, especially if you have a big money in the market. If your whole trading confidence will be crushed, it will be completely destroyed. That is because you could not understand the simple point that direction and volatility is real. The fact that Bitcoin keeps going up, 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 up does not guarantee that one day you will not wake up in the morning and everything will just go pew. But here's the thing: we also believe that Bitcoin is new to the market, so adoption is taking place daily. So there is this struggle between adoption and, at the same time, those who have adapted are scared on how far it will go, and at the same time, there is a secret in price action trading that says that there is a point that price will fall on its own weight without anybody doing anything, without anybody even selling. Price on its own weight will fall. Is in price action. If you're trading price action and if you really gone deep into price action, you will understand this. A lot of our past mentors and veterans in trading has written it in books, talked about how price can fall in its own weight. Stock, bond, hundreds and thousands of years ago, people like Jesse Livermore, they talked about this thing on how their starting stage that price we get to, there will be something they will call a crash. I'm sure some of us have heard of bubbles in the economy, right? In any economic market, we heard about bubbles and how crashes happen. Now, most times it's not one person who sell that crashes the market. It is the market falling in its own weight. When you have gone too far on a height, let's say you are climbing a ladder. Let me explain an example of what it means for market to fall in its own weight. Let's say you are climbing a ladder, right? And this ladder you are climbing has a weight, a particular weight it can carry, right? You keep climbing and going up, you are clearing every obstacle, but you're forgetting that you personally, you have a weight that the ladder can carry. So the higher you go, the more chances of you falling on your own weight without anybody even touching you. So let's say when you get to a certain height, because of how high you have climbed, you find yourself instantly crashing. And such a crash always come without a bounce. Like, for me personally, I've been expecting that we could at least, because if you look at Bitcoin, and yeah, I did predict that Bitcoin is going to crash from this when we got to that 72k to 70k to 68k area. I made a post and I said the dump go choke on Bitcoin. You can see, you can get that analysis. And but the thing is this, I, as a price action trader, I was thinking that we could get price to respect this line. But I was also having this open mind that we're going to get to this point, right? Of which we just did, right? That 40k to 42k range, of which we just did. Now, one thing with price analysis is that no matter my analysis, no matter my prediction, I use stop loss, of which I do not know if every other person out there is doing that. And it might be the reason why I've come this morning to discuss it is I don't want it to be that Bitcoin Gorilla made a prediction for you and you bought the coin and you got stuck in the coin. Now, I am only but a human. I make prediction based on what I see. I know I predicted this Bitcoin falling from this 68k to probably 30k, but here's the thing. I saw a bounce happening around that 54k area, but unfortunately the bounce did not extend more than 60 and 58k area, right? And of which changed direction and instantly instead went to my main support that I've been looking at, which is around the 40k area, though it has not touched it, but chances are high right now, right? But here's the thing, if people I call this entry for bought this coin and don't understand how to use stop loss, I personally use stop loss. It means I have cheated you, right? It means you're going to say, oh, but you call this coin, now I'm stuck in the coin. So I am here today to tell you that if you're listening to any analysis that I've shared in this platform or any platform before, please also understand that every analysis I always encourage traders to use stop loss. If I made an analysis that there's a support, I will likely tell you the next support that could take effect. I'm always open-minded, so I always share my observation. Even as a trader, personally, every morning I look at this chart to know if my last prediction is still supporting, if the chart and the moves are still supporting my last prediction. Because the reason being that every day is a new day and new money is entering and leaving the market. And this money that are entering and leaving the market affects supply and demand. And this supply and demand that affects the movement of price. And this movement of price will affect you if you do not always constantly know if the support you bought is still being the support that is playing, or it is going to be the next support. If it's going to be the next support, then exit in the support you are by putting a stop loss instantly below that support. Always remember, it is better to lose $20 than to lose $500. It is better to lose $30 than to lose $1,000. It is better to lose $100 than to lose $10,000. Stop loss will take some certain amount of money from you, which you can easily recover back if you re-enter the market. If you exited here with a stop loss or here, you are likely going to buy it cheaper. That by the time it's recovering back off, you have recovered your money. But if you are stuck in the market, not only do you not know when the recovery is going to happen or how long, or if it's going lower, because that is where the threat is. You don't know. You see, as a price action trader, I have gotten to understand that I have to respect the fact that support break. Even though support are like Dunlop. I always say this. I say support are like Dunlop. Breaking is easy. Breaking is easy. So this is why you must treat them how they are. Don't confidently say I've entered a trade, it will keep going. Always have that backup bodyguard called stop loss. So now that we've talked about stop loss and I've explained deeper what stop loss is, now let's talk about how to implement it. Now, if you go to sports, I'm going to talk specifically on spot, because on futures, setting stop loss is easy. Now, if you're trading exchanges like Binance, right, there is no stop loss on spot. This means that you have to manually set a sell order. I repeat, it means you have to manually set a sell order ahead of time using an order type called the stop limit order. So if you go to your Binance, and any other exchange. There are different types of order when it comes to crypto. There is stop market order, there is stop limit order, and there is what? There's stop stop limit order, stop market order, and market order, right? So you have to set this according to stop limit order. Don't use market order, don't use limit order. Market order will sell your coin instantly. So if you entered a coin here, so let's explain this to make it easier. So you must understand the order you must use, because knowing the order you must use will help you to set the stop loss right. Remember, it's manually set. Binance and every other exchange program it to take your money. They did not set it for you. They did not program any stop loss for spot traders because they don't want you to escape the dump. That is how they make money. When you lose money, they make money. That is how it works. So you must know something like, take for example, this support that we have right here. Limit order. If you enter the trade here and you put your stop, you want to set stop loss here. If you use limit order for the stop loss, it will automatically close the market in an instant. If you use limit order here, it will instantly close the market if you use market order to set the stop loss, it will close the market in an instant. So what is stop loss? Stop loss is if I enter the price at 60k. Please, Binance, if price drops from 50k and goes to 60k, automatically sell my trade, which means this has to be a future order, which means it has to be a future, because price is still above here. It has to be a future order, which means you do not need market order. What? Because market order buys you instantly. So if you use market order to say sell for me at 68k, it will sell the market and close the market instantly, and you find yourself getting kicked out of a good trade if it was a good trade. Using limit order can still have that same scenario playing out, because limit order, you're not telling market sell for me if it goes down, but I don't mind you selling it at any price. So as it goes down, it will take the order. Now, limit order can stop you, can function as a future order, but most times boots mistake limit order and buy you even before the stop loss gets there. So even before the 8k gets there, they will kick you out of the trade. And what if the trade never gets to the 8k and turn back? You find yourself getting kicked out. This is why the best option remains stop limit order, because stop limit order gives this order that it must get to 58k. If price does not get to 58k, don't close this trade. So once price get to 58k, make sure you close this trade. So in stop limit order, they will ask you for two numbers. One is the first box, the first, so you have when price get to limit order, and then when price get towards close order, right? Where you are going, the price is going to sell it, and the price it must hit before it can sell it. So in our situation, you can say price must hit 58k on the dot, and then price can sell you at 59,999, right? You have to have a little gap between. If you say if price hit 58k, sell me at 58k, don't be shocked if it gets to that 58k, the boot can skip your order. Skipping is allowed if you don't give any little chance for the gap. So for me, I always give $1 or $2 gap. So I always say if price gets to 58k, make sure you sell for me at 58, 57,99999. Maybe I'll take $1 or $2 off. This way, once it gets to that point, I won't even if I'm sleeping, even if the dump happened in midnight, even if the dump happened at the time where I'm on a vacation, I would just exit. And the good thing about this is, the good thing about exiting with stop loss is this: you already know how much you're going to lose before it happens. So in the case of price just dumping and you wake up in the morning and see $10,000 loss, and you wake up with a shock, if you are using stop loss and you are setting the order, you will do the calculation right when you are setting the order, right when you are buying and setting order. For me, I always tell Makaveli traders, it's not good to enter a trade without knowing where the stop loss is. Find the stop loss first before you even buy that market. So this is why we always love trading support and resistance, so that even if the support is going to break, our stop loss is going to be as tight as possible. So this, for this reason, even if it happened at midnight, we already know at worst case scenario this is how much I'm going to lose. So if you set it with that stop limit order, when price is going down, even you could have set it 2 months ago and price kept going up, but you already know that as at the way this market is, bata, 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 no matter what happens to Bitcoin, I can't lose more than $200. But I know that if Bitcoin keep going up, I am likely to make $5,000. That is the kind of confidence you're going to have. That is what stop loss does. So if I can say, okay, Dogecoin, like Dogecoin broke all the supports that I know of. Look at Dogecoin. Let's take a look at Dogecoin. Dogecoin broke all the support. You can see it. I was one of those people on Dogecoin. I bought Dogecoin personally, but I set a stop loss, and the stop loss was, once anything happened, take me out. You can see this is where my stop loss was. This was what I said, if anything happened, take me out. I put my stop loss right here. If anything happened, take me out, because I know that if anything happens to this point, then it's going to get to this point. And unfortunately, it even broke the support that I was hoping is going to hold. So all the weekly support has gone. But the thing is, it has come back above that support. The good thing about me exiting this point is now I can wait to see if this was a stop loss hunt. This last support break could be a stop loss hunt. How? If price successfully climb back above this support, then I can take another risk of entering confidently, because now it has gone way below where I entered, right? It's giving me an opportunity that if I enter and it goes back to my first entry, I have recovered the small stop loss loss I took. So if I took $200 loss, my mind is now clacking, okay, I've taken $200 loss. How do I recover the $200 loss? So stop loss has saved me. Instead of taking $1,000 loss, I took $200 loss. Now, how do I recover? The only thing is I need patience to make sure that they have recovered from this breakdown. If they are able to recover from this breakdown, then I can enter the market and put another stop loss right here. So I must know where my stop loss is going to be. But before I do that, I must make sure they recover by giving me a good bullish sign, right? Because right now there's no bullish sign. So I have to be patient. Stop loss requires a lot of patience and understanding. Stop loss requires you accepting loss. Using stop loss does not mean you will not take any loss. But where it becomes really bothersome is when you see that you put a stop loss and then you see price actually go into your stop loss. Now, this is a part that a lot of people really make a lot of mistakes, right? The mistake that you see somebody probably entered a trade right here. He entered a good trade. He put stop loss here, right? And then the trade went up and got rejected in this resistance right here. Now, instead of him to exit, he feels like their chances are high that it could go and break that resistance. Maybe when it returns, it's going to respect this new support area and it's not going to kick me out. Now, you know that your thought is that it will keep going. But unfortunately, you wake up in the morning and price returned and you see the price is back to this point. Now, it has not broken the support here. It has not even gotten to your stop loss. This is a lot of mistake I get from a lot of people. People come to me and say and complain. Personally, I used to make this mistake a lot until I learned to stop it, because I noticed that it doesn't do me good. Instead, it does me more harm. That this mistake I'm about to share with you might have happened to you if you have used stop loss before. Is a lot of reason why a lot of people run from stop loss and at the end of the day wish they actually use it. Now, see the thing, when you enter this trade, you calculated your stop loss, you did everything you need to do, and you set the stop loss fine and good. Trade was going fine, smile was on your face. But after a few weeks, Bitcoin change, Dogecoin change direction and return to your support, the point where you bought exactly that price. Now, this will start creating an internal battle in trading. One of the biggest challenge of traders is their own personal emotion, their own thoughts. Because it has returned, now you are scared. Ah, I don't want to take $2 loss. This is going to haunt my stop loss. It's going to hit my stop loss. It's going to hit my stop loss. You have two choice. Now, you knowing that it's going to hit your stop loss should be an advantage to you, not a disadvantage, right? How? You knowing that it will hit your stop loss does not mean that you go and remove the stop loss, because that is where the mistake come. Some people knowing that, okay, after seeing this candle, because this big candle is a threat, right? This big candle is a threat on the support, right? So if this big candle is a threat and you're seeing this next candle is likely going to take you out on this support, though, you, instead of you to say, ah, it is better I exit in my entry and break even. They call it break even. It means you are not greedy. It means you have taken the fact that you saw a profit and you did not make the wise decision of taking the profit, and the profit has turned to loss. Now, instead of the profit you saw has disappeared, but the head of your money is still with you. It is either you make the decision to take the head of the money and exit the position entirely to see how far the dump will go. But instead of making that decision, that is the correct decision to make. But instead of making that decision, a lot of people will choose to remove their stop loss. So instead, they will say, ah, it is going to bounce. Let me just hold now. Everybody is holding. Let me hold. Let me just remove the stop loss. This stop loss is never a good idea. At the end of the day, it's going to come and kick me out, and then position will keep moving. So you choose to option to remove the stop loss. But what happens? It comes to the stop loss and it keeps going deeper. So instead of you being saved by $200 loss at this point, you ended up in this point with $1,000 loss. This is weekly chart. So this candle, do not take it for granted. This is the candle that I've dumped the last 1 week, and it's not been a good candle. It took Dogecoin from 0.22 all the way from to 0.12.